Did you know that a new banking regulation was quietly approved in California literally overnight, and it could affect your money as early as this week? We are talking about a major shift with no media buzz and no public announcement, yet this single rule could limit how you access your own cash, flag your everyday transactions as suspicious, or even trigger unexpected fees that drain your balance. This isn't just a local issue. Financial experts are warning that this is the blueprint for a nationwide transition that could leave your bank account frozen or your family transfers stuck in a compliance nightmare. Before we pull back the curtain on this financial reset, make sure you subscribe to Tax Hack Pro. We follow the money and the legislative hacks that the mainstream media refuses to audit. If you want to protect your financial freedom, you need to be part of this community. The scariest part of this overnight regulation is how it targets the very apps we use every day, like Venmo, Zelle, and Cash App, turning them into high surveillance zones. You need to watch this video until the very end because the 10th reason on our list is a liquidity trap that could lock your emergency funds exactly when you need them most. Number 1. Instant access to your own money could be blocked without a single word of warning. We have all grown accustomed to the convenience of the digital age, pulling cash from an ATM or sending a quick transfer and expecting it to happen in seconds. But under the new 2026 banking protocols, that instant access is being replaced by mandatory review periods. Banks now have the authority to delay or limit withdrawals, especially for larger transactions. These flags don't require any evidence of fraud. Simply having an unusual spending pattern or receiving money from multiple sources is enough to trigger a temporary freeze. Imagine standing at a register trying to buy essentials, only to have your card declined by an algorithm you didn't even know existed. To protect yourself, Tax Hack Pro recommends keeping a buffer in at least 2 separate financial institutions so you are never fully locked out of the system. Number 2, peer-to-peer apps are the new high surveillance zones. Venmo, Zelle, and Cash App have become the primary way we split bills or pay for side gigs, but this new regulation introduces much stricter reporting requirements. We aren't just talking about $10,000 transfers anymore. In some cases, transfers of just a few $100s between friends could trigger an automatic alert to federal regulatory agencies. If you are running a side hustle or receiving multiple small payments, your account could be restricted for suspicious activity without any red flags appearing on your screen until the moment you try to use your balance. This quiet hold is the new standard for digital payments. Number 3, joint accounts are turning into legal landmines. Most people open joint accounts with spouses or business partners to simplify their lives, but the new rules allow banks to reevaluate the legal ownership of those funds on the fly. If one person on the account is audited or flagged for unrelated activity, the entire account and your access to it can be restricted. In some scenarios, banks are now requiring dual approval for withdrawals that hit specific compliance triggers. If your partner is unreachable or traveling, your money is effectively in a digital vault you cannot open. Now is the time to review your joint agreements and consider separating your primary emergency funds. If you want to stay ahead of these quiet shifts in the banking system, you must subscribe to Tax Hack Pro. We break down the fine print that the big banks don't want you to read. Number 4. Automatic reporting to federal agencies is getting easier and faster. In the past, the $10,000 rule was the standard for bank reporting, but that threshold is being aggressively lowered. Some insiders suggest that transactions as low as $600 are now being funneled into government databases, especially those involving digital platforms. This creates a guilty, until proven innocent, environment where your everyday grocery runs or used furniture purchases put your name on a compliance watch list. The best defense is transparency. Always add clear memos to your transfers so that if an automated system flags you, the human reviewer can see exactly what the payment was for. Number 5. Small businesses are facing immediate cash flow chaos. If you run a bakery, an online shop, or a freelance gig, this regulation could hit your bottom line this week. Business accounts are being subjected to high-risk compliance standards, which means banks can hold your incoming revenue for longer periods to verify the source. For a business that relies on weekend sales to pay for Monday's inventory or payroll, a 3-day hold is a death sentence. You need to contact your bank immediately and ensure you are on a preferred merchant list to avoid these automated freezes. Number 6, AI-driven freezes are happening faster than ever. Banks are now using advanced behavioral algorithms that analyze your account in real time. The problem is that these AI systems don't understand human context. A last-minute hotel booking or a sudden payment for a family emergency looks the same to an algorithm as a fraudulent transaction. Once the system restrictively locks your account, the burden of proof falls entirely on you. These freezes can take days to resolve, especially during holidays or weekends when customer service is limited. Number 7. This is just the beginning of a nationwide shift. History shows us that California is the laboratory for the rest of the country. From emissions laws to data privacy, what starts in the Golden State usually goes national within 12 to 18 months. If you wait until your own state adopts these banking rules, it will be too late to move your money or adjust your strategy. You are in the waiting line for a financial reset, and you need to act as if these rules are already live in your zip code. If you are finding this information vital for your financial survival, hit that like button and subscribe to Tax Hack Pro. We are your watchdog in an era of increasing financial surveillance. Number 8. Hidden compliance fees are being slipped into your statements. With the cost of these new regulations increasing, banks are looking for ways to pass the bill to the customer. You may start seeing security maintenance fees or transaction review charges appearing on your monthly statements. They are often small, $6 to $10, but they add up over time and are designed to be overlooked. Review your statements line by line every single month, and don't assume any new fee is valid without an explanation from your branch manager. Number 9. Accounts are being closed without any warning or explanation. Under the new risk-based de-risking protocols, banks can choose to shut down an account entirely if it doesn't fit their narrow compliance profile. If you send money overseas to family or deal in large amounts of cash, you are now a high-risk entity. Banks would rather lose your business than risk a federal fine for insufficient monitoring. Once an account is closed, your direct deposits are blocked and your savings are frozen, often for 30 to 60 days, while the bank processes the closure. Number 10. The emergency fund liquidity trap. This is the most dangerous part of the new regulation. The rule allows banks to restrict outgoing transfers from savings accounts if they are deemed irregular. If you have a car accident or a medical crisis and try to move $5,000 from your savings to your checking, the bank can place a 72-hour hold on that transfer. Your crisis doesn't wait 72 hours, but the bank's compliance team does. This is why having a portion of your emergency fund in physical cash or in a local credit union with lower oversight is no longer just a prepper idea. It is a survival necessity in 2026. We have uncovered the 10 reasons why your financial freedom is under attack, but the solution is in your hands. This isn't just about local laws. It is about the changing nature of how we control our own wealth. The banks want you to believe that compliance is for your safety, but at what cost to your privacy and access? You stayed until the end, which means you are exactly the kind of person who will survive this transition. You are informed, you are vigilant, and you are ready to adapt. The mainstream media won't tell you about these overnight regulations because they are funded by the very banks that benefit from them. But here at Tax Hack Pro, we answer only to you. Take action today. Audit your accounts, diversify where you keep your cash, and always add a tax hack mindset to your banking. If you found this investigation helpful, share it with one person you care about. Knowledge is the only currency that doesn't lose value. Subscribe now, turn on those notifications, and I will see you in the next investigation, where we expose the digital dollar trap that is being built right under our noses. Stay sharp, stay curious, and stay in control of your money.